What the heck is buy now, pay later? It's relatively new. It doesn't show up on your credit report. It shows up on your bank statement. An underwriter has to look at it and say, hey, there's a debt out there that you are responsible for. And if your debt to income ratios are super tight, then that could cause a loan not to get approved and fall out halfway through or towards the end of the process. Zelle's, Venmo, Apple Pay, all this new technology of how people are moving money. Guess what? Anytime you move money, underwriters are looking at... Welcome to the Real Estate Show with Pat Lopez, where we talk everything real estate. For this show, we're going to talk about interest rates. Why are they coming down? And buy now, pay later. What kind of impacts does that have when you are applying for a loan or a mortgage? So let's jump into why are interest rates coming down? There's several reasons why they're coming down. One, the spread in between the MBS, the mortgage-backed security, and the 10-year Treasury are starting to get better. Also, the heat that the administration is starting to put on the Fed, and we had two Fed governors dissent and say, hey, we think we should start, cutting rates. And then we even had one of the Fed governors resign or quit early because she had a teaching position at Georgetown University, and she wanted to start in September, so she left early, a couple months early. She was due to be up in January. So now there's another Fed member that's going to be coming on board where they're going to be aligned towards Trump because Trump gets to nominate that Fed governor. So there's some pressure and heat there. And then inflation numbers, they're coming in line. Everybody thought with the tariffs that was going to have a real big impact on inflation. And it really hasn't, slightly, but there really hasn't been any great, movement higher for inflation numbers. And, they may have gone up just a little bit, but then you had energy has come down a lot. Food prices have come down a lot. So it bounced everything out. So we're really not seeing a major move, with inflation. Now, why are the spreads getting better? A lot of people say it's spreads. I've never heard of that. What the heck is a spread? Well, back in 2023, you had some banks. You had Republic First Bank. You had Silicon Valley Bank. They all, went under, basically. And, the government had to come in, the Fed had to come in and bail them out. Okay, and that's where we saw the spreads really get out of whack. Because if we look at the past 50 years, the normal spread over the past 50 years between the 10-year Treasury and the MBS, or the 30-year interest rate, has been historically at 1.72%. Well, in 2023, we hit 3.1%, almost double. And that's when we saw interest rates hit 8%, because when the 10-year Treasury hit 5%, and then you had that 3.1 spread, that's where interest rates were in the 8s. But right now, we're starting to see a stabilization in the market and that spread come down. So right now, the spread, 2.4. So at 2.4, and then you add where the 10-year is, so let's say the 10-year, and it ranges, but let's just say, the 10-year is at 4.2 to 4.4, you add those two together, we're in the 6s, okay? And if we can get that spread to come down a little bit more, let's just say at 2%, and the 10-year Treasury is at 4.2, now we're talking about the low 6s. And that's pretty much, where we're getting to right now. Now, you combine that with September, we have Scott Bessent, who is the Treasury Secretary, is calling for these reduction in the federal fund rate, and he's calling for 0.5%. So we have all this pressure coming on the Fed, and then just the economics of the United States are coming in line, which is causing these interest rates to come down a little bit. Good news, hey, if you're buying, if you're selling, good news. Rates have come down a good 0.5%. And once again, we are at the lows for 2025. Hopefully we can see that 6%, 6.25%, because if we can stabilize and get interest rates in the high fives to low sixes, we're just talking about a lot more people, affordability, a lot more people jumping in the market. So good news. So hopefully, rates will continue to drift down. Hopefully the inflation numbers keep on coming in, in line, and the Fed starts cutting rates in September. Okay, now let's jump into buy now, pay later. What the heck is buy now, pay later? Well, it's relatively new. It's been around for, I guess, a year or two, but it's when you're able to buy something and you can pay it over 4 payments. Now they expand it to 6, 12, even as far as 24 months. So you could have 24 months. Now, why would somebody do buy now, pay later programs? Well, you can skip your first month. So if I buy something, today, I have 2 months before I have to start making a payment. If I pay it off early, there's no interest. So that would be a little bit better than, perhaps using a credit card. And plus credit cards with 24% interest, it just is super, super high. And a lot of these stores are offering it. So when you turn around and you go to the cash register because you're buying something, they'll offer, hey, you want to do buy now, pay later, you can apply, you can, get this. So this is something that is super prevalent now out there. Now, what impact does that have if you do buy now, pay later? Well, it doesn't show up on your credit report. So when you're doing what's called debt to income ratio, you're looking how much income somebody makes and what their debts are. Well, typically you look at the credit report to see what your debts are, okay? But this is not showing up. So where does it show up? Well, it shows up on your bank statement. So now you're looking at your bank statements to see, do you have any of these buy now, pay laters? And some of these names for these, buy now, pay laters are this Klarna. We also have Sizzle, Afterpay, and Creddees, I guess Creddees, whatever they call it, the correct pronunciation for that. So there's these services out there, and they're gaining in popularity, and more people are using them. Okay, so if you're out there and you're a mortgage professional, you need to really look at that bank statement to see if you have that, because now underwriters are looking at the bank statement, and if there's an undisclosed debt, because that's what is considered an undisclosed debt, because you have up to 24 months to make the payments on these, depending on, what program you do. You could do it in 12 months, 4 months, 24 months. An underwriter has to look at it and say, hey, there's a debt out there that you are responsible for, and then that needs to get added. And if your debt to income ratios are super tight, then that could cause a loan not to get approved and fall out, halfway through or towards the end of the process. So that's super important. Buy now, pay later. Really look at the bank statements. You really need to analyze that. And while we're talking about bank statements, Zelles, Venmo, Apple Pay, all this new technology of how people are moving money. Well, guess what? Anytime you move money, underwriters are looking at those bank statements, and they're going to ask questions. And it's not normal. I just saw a bank statement where a person who makes $50,000 a year had 30 of these Zelles going back and forth in between, various people, and they were for $800, $900, $700, $500. That's not normal. Somebody who makes $50,000 a year, it's not normal to have that kind of money moving back and forth. So an underwriter is going to look at it and say, this doesn't make sense. How are you moving all this money? What is going on here? So if you're applying for a loan, stop with the Zelle, stop with the Venmo, stop with all that stuff, because lenders have to look at that bank statement. And the same thing with overdrafts. Overdrafts, if you have one overdraft, okay, everybody can make a mistake, but if you have 3, 4, 5 overdrafts, that's considered financial mismanagement. So bank statements, you really have to look at those and be careful what you do. Make sure if you're out there getting pre-approved, make sure you're looking at these bank statements and you ask these questions. So there you have it. Interest rates are coming down. Good news. Hopefully they keep on coming down. And buy now, pay later. something that we have to deal with. Technology constantly changes, and there's always new things coming about. That's what makes the real estate industry so interesting. Things constantly change. You're always on your toes. You're always learning new things. Hope you enjoyed the show, and be sure to follow the show on Facebook, Instagram, and of course, YouTube. Watch the show on YouTube, The Real Estate Show with Pat Lopez. Leave some comments and do some likes. Really helps the algorithm. I'm getting close to 40,000 subscribers. Help me get over the top with the 40,000. And, let's keep on going. Hopefully you enjoy everything, and I will see you next week. Bye.